Welcome to This Locale podcast. Today, we're popping the hood on a fascinating, and I mean really high-stakes, economic blueprint. It comes from the work of Miran, and this thing, it could radically reshape global trade and, believe it or not, your own financial future.
All right, here's what we're going to cover. We'll start with the big problem at the heart of all this. Then we'll walk through the two-part plan to fix it. After that, we'll look at the two wild ways it could all play out, a boom or a total bust. And finally, we'll get to the most important part, what this all means for you.
So to really get what this plan is about, you first have to understand this kind of weird paradox that's been sitting at the center of the U.S. economy for, decades now. It's a real head-scratcher. It's a heck of a question, right? The idea that the U.S. dollar, the symbol of our economic power around the globe, might actually be the very thing holding our own industries back. But this isn't just a theory. Let's look at the numbers. It tells a story that's all too familiar for a lot of towns across the country. It's this long, slow, painful bleed-out of American manufacturing jobs. Now, many economists look at this and argue that the dollar itself is one of the main culprits.
And this is the name of the beast, the Triffin dilemma. Okay, think about it like this. The U.S. is the world's banker. Everybody needs our currency, dollars, to buy and sell stuff internationally. To get those dollars out into the world, we have to send more money out than we bring in. That's a trade deficit. So we make a killing in finance, but we end up slowly shutting down the workshop back home.
So if that's the problem, what's the solution? Well, this is where we get into the blueprint from Miran's paper. It's a really bold, two-part strategy to take this dilemma head on. And listen, this isn't about small tweaks. We're talking about rewriting the entire rulebook.
The goals here are crystal clear, and they're totally connected. Number one, bring factories and the good jobs that come with them back to the U.S. And number two, start treating trade as a matter of national security, not just dollars and cents, to rebalance the scales of global power.
So how in the world do you even start something this big? Well, the first move is not subtle. It's a big, loud, attention-grabbing hammer swing designed to make everyone snap to attention. Yeah, 60%. A number like that isn't just a tax, it's a shockwave sent through the global system. And it immediately brings up the biggest question of all. If you slap a 60% tax on something, who actually pays for it? The answer, well, it's a bit of a shell game. It all comes down to this idea called currency offset. Stay with me here. If the U.S. puts that huge tariff on Chinese goods, China's currency might drop in value. Now, if it drops by the same amount as the tariff, guess what? The price for Americans doesn't change. China basically eats the entire cost. But if their currency doesn't move, then that entire 60% gets passed right along to U.S. companies and eventually to you at the checkout counter. Tariffs like this cause inflation. Prices for imported stuff go up. Now, normally, the Federal Reserve would see that inflation and slam on the brakes by jacking up interest rates, which would probably send the economy into a nosedive. So for this whole plan to even have a chance, you absolutely need to control interest rates. Now, according to economist Richard Duncan, this isn't just some crazy idea. It's a step-by-step playbook. A president can use their appointment power and some other executive moves to get a loyal majority on the Fed's Board of Governors. And once you have 4 out of 7 votes, you effectively run the show. You control the nation's money supply. And this quote, it really gets to the heart of the endgame. It's about fusing political power with monetary power. This would just completely shatter the long-standing tradition of an independent Federal Reserve. We'd be in totally uncharted territory for the modern U.S. economy. So, let's say it happens. The tariffs are in place, and the Fed is under political control. This is where the road splits, and we could head down 2 very, very different paths. It all depends on how this immense new power is managed. In one scenario, you get a wealth bonanza. With the government hitting the gas and the Fed printing money to keep interest rates pinned to the floor, asset prices, we're talking stocks, real estate, everything, could just go to the moon. But on the flip side, if you lose control of that money printer, you could trigger a dollar crash. Runaway inflation could wipe out savings and lead to a catastrophic bust. Okay, so let's try to bring all this home. It's a lot, I know, but let's break down what this all means and what some of the key takeaways are from this pretty radical proposal. Let's just boil it all down. The core problem is that the dollar's global dominance hurts American factories. The plan hinges on a crucial fact. A president can, legally, take functional control of the Fed. The potential benefit is huge, bringing industry back home, boosting national security, and maybe even a short-term asset boom. But that creates a massive new problem, the risk of out-of-control inflation. Even though it's a fact that in the recent past, currency shifts did absorb a lot of the tariff impact.
So, what can you do? Well, here are 3 things to think about. First, consider assets that tend to hold their value when inflation kicks up. Think real estate, commodities, things like that. Second, start paying really close attention to who gets appointed to the Fed. It's not just a boring news story anymore, it's central to the plot. And third, take a hard look at how much your own job or investments depend on everything staying stable with global trade.
And if a plan like this actually starts moving forward, there are a few sectors that could really catch a tailwind. Domestic manufacturing is the obvious one, right? It's the whole point. Energy and raw materials, hard assets, could do very well if the dollar weakens. And finally, the defense industry, which is directly tied to the national security goals of the whole strategy. And that, right there, is the billion-dollar question we're left with. Is this a brilliant master plan to revitalize the country? Or is it a wild gamble that could bring the whole system crashing down? Just understanding the stakes, the pieces on the board, and how it all fits together, that's the most important first step to being ready for whatever comes next.